Hello and welcome to the Property Trio, the podcast for the sophisticated property investor. As always, I'm joined by my two fabulous co-hosts, Cate Bakos and Mike Mortlock. How are you both today?
So good to see you fellas. I missed you. We had a little gap last week. Not that our listeners know that, but
We
it's
did.
nice to get the band back together.
I was getting my motorcycle license. That was actually the reason why I was unavailable.
You're just on a quest for dangerous stuff, aren't you?
My midlife crisis is just setting absolute records.
Yeah. I was down the surf coast and enjoying myself in the ocean with the kids. But I must first day back at school today for us. So the three kids have just been dropped at school by Sarah, and the house feels peaceful.
I bet it does. All my staff have just talked about their kids going back to school. I've still got a sleeping blob that's just in her bed and not waking up till 2 p.m. because she doesn't have to, because uni doesn't start for another month. But yeah, my house doesn't feel like yours, that's for sure.
Our neighbours 2 doors down who also have 3 kids walked past just as we were heading out the front door, and there was fist pumps from the parents.
I'll bet. I'll bet.
So look, today is our annual episode on our predictions for the upcoming year. Now, that will be 2025. And it's our predictions, I guess. It's a little later than ideal. We're doing these predictions in late January, but I don't think what we think will have changed too much over the last few weeks as Australia gets back to work post-Australia Day, seriously. So without further ado, I'll jump into our 11 predictions that we predict on each year. So we'll start with the big one, and I'll start with you, Cate. What's the market going to do?
Well, overall, I think our national market will fare better than 2024. So if we cast our minds back, we did positive 4.9% nationally in 2024. I think we'll have a strong start, particularly in the first quarter, but the second quarter could be sluggish with the federal election looming. And pending interest rate movement, obviously that's the big one. But today I said to both of you, I wanted to have some very specific predictions so that we can either high five each other or laugh at each other, but put a little bit more skin in the game. So if we have a cut in Feb, I think our market will outpace last year. The second half of the year will firm up for a reasonably good finish, but I don't see 2025 being a double-digit growth year nationally. I think it will be between 5 and 10%.
Okay, 5 and 10%. There's the numbers. Are we happy with
that range, Dave?
Now, well, I must admit you told me 5% was too broad a range, Mike. So I've narrowed my range to 3%. Should we hold Bakos to a 3% range?
All right, I'll do it. I reckon it's 6 to 9%.
6 to 9. Okay, there we have it. Mark that on the board. That's chalked up. And we'll come back to celebrate or haunt us. Look, there's some really interesting points in there, Cate, which a fair few of those I agree with. But before I say my predictions, what say you, Mr. Mortlock, for 2025?
I am sort of on the other side of the spectrum. I think we're going to slightly underperform 2024. I can just picture myself 12 months from now really regretting everything that this guy from the past is saying. But I think the year that we had last year was really dictated by the stellar growth of those three markets, Perth, Adelaide and Brisbane. I don't think they're likely to post numbers that high again, and I think that's part of the reason why we got dragged up to the 4.9. I think those are going to be a little bit more modest. We might see some other capitals coming into play in positive territory, but I'm going to say 3 to 6%. But I actually think it'll fall under 4.9.
Yeah. Okay. All right. Well,
so 3 to 4.9%.
That'll do.
Well,
if I get that one, that's tight.
Look, I must say I'm pretty well. Actually, my prediction was 3 to 6%, the same as yours, Mike. So we're thinking reasonably similarly. My words were not exactly the same as yours, but we're very similar. Like we have superstars slowing down at a rate of knots. So that's Perth, Brisbane, and Adelaide. And although I think there's going to be a few rate reductions which will ignite some parts of the market. I don't think it'll do enough to put any of the markets into overdrive for 2025. And as I sort of alluded to in a previous episode, I think this will be a year for setting up for some big results in 2026 for certain capital cities. And my recollection was the last 12 months was sort of mid-fives for the nation rather than 4.9. But whatever it was, whether it was 4.9 or 5.5-ish.
I think we had a bit of a slowdown, and I grabbed the December data that came out in Jan.
Okay.
I think when we did our predictions, we might have been looking at November data.
To November.
So your memory is good, Dave.
Yeah.
Because we did decline at the very last couple of months.
That would make sense. Okay.
Read that in the papers, right? National housing market on the crash, like just from that 1 month.
Yeah, we have had those headlines, haven't we? Okay, good point. So, look, I did have the 3 to 6, but I do feel like we will underperform last year for the same reasons you've said, Mike, which maybe means I should be saying 3 to 4.9, but or 1.9 to 4.9. But look, I'm going to. Do I stick with 3 to 6? Look, I'll stick.
Well, if you do something different to Mike, one of you will win. Unless I was right.
It's like the Price is Right with Larry Emder.
Yeah, that's right. The luggage or the washing machine. Oh my God.
Yeah. There's an advantage to going last.
Why don't we go for like a round percentage figure?
Yep. Well, so we can have our ranges and then pick a set number. Is that what you're suggesting?
I reckon.
Okay.
I'm going to say 4%.
Okay.
7.5.
7.5. All right. Because you said 4, I'm going to say 3.5.
Right. That's just mean.
Well, it was either that or 4.5. I'd probably land around 4 as well, to be honest. So we did both have 3 to 6. 3 to 6%. Okay. Well, look, is there anything else we'd like to share on what the market will do over the next 12 months on this first prediction?
No, I'm going to let my second prediction flow into that answer, Dave.
Yeah, makes sense.
I would like to say that I expect that there will be parts of the country, markets that will do comfortable double-digit growth, and we could see some markets do 20% plus. So across the board is a very, very different thing to say that there won't be huge opportunities for investors in 2025. I still think there will be, but if we're talking about the national property market, I do expect it to be slightly softer just because of those three big markets won't post the same.
Okay, so here I'll differ with Mike. I don't think any markets, capital cities or broad regions will do beyond 10% in 2025.
Oh, I can't wait for this one.
Yeah, we're talking.
But I think this year's all about setting up for 2026. Have I already said that?
Yeah.
All right, prediction number 2. Capital city top performers. This can be the one that really bites you on the bum. All right.
Could. Now, this is why I came up with the number that I did for national. And I also wanted to just say, even if Adelaide, Perth, Brisbane didn't perform at the same rate of knots, we've also got to look at bigger markets. So, Adelaide and Perth aren't massive markets in terms of, number of housing sales. So even if they did have a decrease, if the East Coast steps up, that could really underpin a broad national growth figure.
Yeah, or vice versa. Yeah.
Absolutely.
Which is really what happened last year, isn't it?
It is, yeah.
Yeah.
And I think the capital city top performers will be Adelaide, Perth and Melbourne in that order. Adelaide number 1, Perth number 2, Melbourne number 3. I think Adelaide's job growth, its lifestyle appeal and its living affordability, so outside of housing, which has obviously grown in value quite dramatically, when you look at other affordability measures, South Australia is not super expensive. I think that'll continue to keep it a popular destination, particularly for visitors. And, visitors enjoying all of the spoils of South Australia certainly brings money into their economy and puts it on the map in people's minds. Anecdotally, we know that more visitors are enjoying Adelaide and the South Australian regions, and that could build momentum in a similar way that Tasmania has for travellers as well. So that's why I've kept Adelaide number one. Perth, I think it still has more go in it, and particularly when we look at it playing catch up. And that while we have seen a decrease in the rate of growth, I don't see Perth all of a sudden turning that tap off. I think that Melbourne, I'm getting so many inquiries from people who view Melbourne as the next one to go. And I know that mean reversion is a common theory, and it's not necessarily a reason on its own to stimulate a city's growth. But I do think that Melbourne will step back up this year and come in at number 3.
You've made some compelling cases there, Cate.
We will only see.
I
It's
think,
just a show.
Yep. All right. So Cate has Adelaide 1, Perth 2, Melbourne 3. Over to you, Mike.
I have Melbourne in a close 4th and Hobart 5th. I actually went all the way top to bottom just to really regret.
Awesome.
What I'm doing. I've gone Perth, Brisbane, Adelaide, Melbourne, Hobart, Darwin, Sydney, Canberra. Sorry to Canberra, but it just looks gross still.
So was that Perth, Brisbane, Adelaide, top 3?
Perth, Brisbane, Adelaide, they're my top 3. Yeah. I mean, Perth, I'm worried about.
At all?
It's had such a rapid decline in the last little while, but the affordability ratio is still there, and we are still doing well from a resources point of view. And, there's still, it's still tracking fairly solid. So I would love to see Melbourne in the top 3. I don't know. I think it might take another 12 months.
Yep.
Yeah.
Cool.
Okay, so basically you've got the same top 3 as 2024.
Is that? I didn't know that expressly. I wasn't sure whether Brisbane, Adelaide I'd mucked up, but.
Oh, so which order did you go with? Perth, Brisbane,
Adelaide.
Yeah, so but change the order because 2024 is Perth, Adelaide, Brisbane. Okay, yeah. Look, I've got. I think those big 3 will continue to fade, but I do think Perth, because it goes into the year with the highest rate of growth, and I think generally 2025 is going to be a weakish year across the board as those capital cities fade and the others don't start to fully recover and move forward. I think we'll see the beginnings of that in the second half of 2025. So, look, I've got Perth number 1, and I've sat on the fence after that because I think I can't pinpoint another star for this year. Like as we've alluded, I think in 2026 that's going to be the year of Melbourne, and also expect Sydney and Hobart to start.
Dave, you got more to say about 26 and 25.
I do. I think 2025
zeroed in further.
It's zeroed in on this being a boring year, basically.
But you're still going to have to pick a second and third. You got Perth.
You want me? All right. You want me to? Okay. All right. I'm going to go with. I'll go with Adelaide number 2. And I'll go with, I just don't think there's going to be much performance anywhere else this year. I think it'll be a year for buying at the suppressed end of the market. But I'll put Melbourne in 3rd. So Perth, Adelaide, Melbourne is my top 3 for this year.
Oh, wow. We're almost aligned.
We're all saying Perth number 1. Is that right?
No. I said Adelaide number 1.
Adelaide number 1. Right. Okay.
And who did you have 2 and 3 again?
Perth, then Melbourne.
Adelaide, Perth, and Melbourne. Okay, there we have it. So capital city performers, they are now up on the board. Our predictions for number 3 for regional locations.
Ooh.
You want to kick us off, Mike?
Sure.
I'm not sure if I answered this correctly because I've just gone like regional states 1, 2, 3.
Okay.
I have picked 2 best performing regional cities though. Did you guys come up with regional locations specific to the town?
No. Yeah, I did. I
just came up with 1. Yeah.
Okay.
Kate's more officious than we are.
I love my regions. You
just ordered every capital city, Mike. So
yeah. How long have we got? I've got 15,000 suburbs ranked top to bottom. I've said regional Queensland number one. Part of the reason for that is informed by our own data, which shows that the number one LGA for investor purchases for 2024 for us were actually in Townsville LGA. And I just think regional Queensland, there's quite a few other markets, those Mackay, Rocky, Bundaberg style things. I think we might see some surprising things from there, but I expect Toowoomba to be a cracker. I think regional Victoria will definitely be looked at because there'll be people that are looking at Melbourne as, the mean reversion, the means middle of the pack. It's been absolutely bashed to within an inch of its life for so much time. But affordability is still a focus. Melbourne's much more affordable, but the regional markets are much more affordable than the CBD sort of Melbourne location. So I've put Victoria second and then regional New South Wales as third. Because believe it or not, there are still affordable markets in regional New South Wales. It's not all just about Sydney.
Wow.
Okay.
Queensland, Victoria, New South Wales. They're my
Queensland, Victoria,
state
New South
regions,
Wales.
1 to 3.
Okay.
Okay.
Well, Mike, I did have a very similar outlook to you, but I was specific about cities. And I agree with you. Townsville's number one. It's just had such a cracking year and it's not slowing down. And I've got some anecdotal experience there because I've got, I sound like Dave getting caned for the WA comment, but I've got family up there and they've had some of their friends asking them for just negotiation and property on the ground tips from me about getting your offer across the line because they're facing multiple offer situations with more than 10 buyers per property and they're just getting all of their offers rejected. So there's that feeling of desperation. And when you speak to more than a couple of people who are in a market, albeit a large city, but a regional city market, finding it that hard to navigate, it just reminds me of what Ballarat felt like when we were experiencing our crazy run in between lockdowns. So that's a hot market and I don't see it slowing down in 2025. So it's my number one pick. I think the Tasmanian regions will grow in popularity with tree changes and retirees seeking a nice lifestyle. And I know it's cold down there, but there's a lot of things that are lovely that you can get away from the mainland with. So I think Tassie has a place there, particularly regional. The Gold Coast is almost a capital in its own right, but I don't see that slowing down. So overall, regional Queensland, I absolutely think will do well. I think that Melbourne regions will show an uptick in the later half of the year. I think we've bottomed out there, and it's a good news story going forward for Victorian regions. And I anticipate that the WA regions won't outperform this year. So while we've seen in 2024 the strong capital performers have also been echoed by strong regional performance in the same state, I don't think that WA will be in lockstep regions versus capital this year. So I've pegged Perth to outperform as a capital city top performer, but not regional WA.
Okay, that's a good summary. Look, I think one of the trends that will continue is that's happened through COVID is that the regional performance will reflect the capital city performance. So with that in mind, given I predicted WA to finish on top, I'll predict Perth regions to finish on top of the regions. I think certainly with the internal migration numbers towards, southeast Queensland, different parts of regional Queensland, I think regional Queensland will be a stronger area as well. And given I had Adelaide up there in the capital cities, I'll choose South Australia regional as also one of the top three performers for me in terms of regional locations.
Oh, cool. That's a good summary. I've just noticed that I said I picked Perth as number one and I didn't. Perth was my number two, but I think our listeners will get the gist of what I meant.
Yeah. Cool.
So recap on that, Dave. Cate, you had Queensland, Tas, Victoria, 1, 2, 3 for regions.
Yep.
And Dave, you've got WA 1, South Australia was third. What was the second one?
Queensland.
Well, we've mixed that up a little bit. Someone's going to be right, or all three of us wrong, which would be not good news for the show.
Yeah. And it's good to know you're keeping a track of our predictions, because that'll be handy to pass to Anne-Marie for when it comes to next year's episode.
It's in my doctor's scribble, so it might not be handy at all.
All right. So prediction number 4 is on what we think will happen with investor numbers throughout 2025.
Well, I did pick 3 regional cities too. I know I said Toowoomba. Townsville. I got Toowoomba second and Gold Coast third. Can we call Gold Coast a regional city?
We still have to, yeah.
We can.
Righto. Those are my
for
3.
the purposes of this program. All right. So investor numbers, back to you, Cate. What do you think we'll see with investor numbers through 2026?
Well, I think they'll grow to even higher numbers than in 2024. And we had quite an increase in investor numbers when benchmarked against the 10-year average. As rates ease and rental yields grow, I see even more investors. 2025 has already started strong with investor activity for my little business. And one driver could also be share market volatility. So if investors get scared of falling share prices, we can anticipate them turning to bricks and mortar. So that will support continued investor activity, in my view.
Okay, good summation. Mike?
It sounds weird to say 10% higher growth when we're already in the high 30s for investor numbers, but I agree with Cate. I think it'll increase. I think we'll probably see another 10% in investor numbers, especially once we start seeing interest rate cuts, which is another thing. We'll leave that for the moment. But yeah, I think we're going to see more people active. I think we saw in 23-24 quite a lot of investors exiting the market. I think there'll be people that will be new people entering, and I think some of the people that exit might be looking for opportunities as well to get back in, perhaps in a state that isn't Victoria.
So with that 10% increase, is that like in finance? Is it like the number of investors? Is it the breakdown of, we've generally sitting like historically, say 35% of the population are investors, 65 owner occupiers. Is it that number?
It's the ABS stat that we normally have in our market update. That's investor excluding refinance.
That's right.
So the finance, the financing.
Thinking, well, that's the measure, isn't it? That's what tells us what our investor numbers are.
Yes.
Yeah. Well, yeah, it tells us how much money is being borrowed or approved for investors. Yeah.
We'll call that the one for this one. 10% more, I'm saying.
Yeah.
Kate's saying think more.
More, yeah. Well, we can't turn our back on intergenerational wealth transfer as well. And that's only going to increase. And people will look to invest that in something solid, whether it be bricks and mortar or shares or bonds or whatever. They're not all going to go out and buy jet skis and have holidays.
Not NVIDIA shares either.
Yeah, look, I think we'll see an uptick. I will say, look, if we're predicting the market to rise by 3 to 6%, and then if investors are going to be a slightly larger share, then you're probably looking in that 5 to 10%. So somewhere in that range in terms of a financing perspective. I think it'll lift during the year. Particularly in the back half with off the back of the rate reductions. I think Melbourne and Sydney markets will start to move forward in the back end, and we know they make up a disproportionately large percentage of all properties. So if they're growing, that also is likely to push up these numbers. But I think, again, 2026 will be the real year when we see a big jump. So that's where I land on investor numbers.
Great.
Number 5, prediction. What do we see? What sort of areas do we see government intervening in the property market in 2025?
Do you want me to answer?
Sure.
I don't think they can do any more minimum standards and changes to rental reforms for a couple of our states, Victoria included. I actually think the spotlight will be on investors if they become too strong a force in terms of threatening the opportunity for first home buyers. So our numbers are looking reasonable for first home buyers in Victoria, but in other states it's not quite the same. We've seen investor numbers tick up, and as soon as first home buyer jungle drums beat, and we've got an election coming up, we can expect some possibly macroprudential instructions from APRA for the banks to try and slow down investors. Stuff like capped LVRs and higher rates for investors are all on the menu. I also expect APRA to reconsider the 3% buffer if house price growth doesn't gallop this year. So I think there's a possibility that we could have that adjusted back to 2.5 once that everyone has determined that interest rates are quite stable.
Yeah, I think it's more of a chance too if the coalition form government.
Yeah, I agree.
Mike?
Well, I have the Liberal Party winning the federal election. Obviously, a lot of this intervention is state-based. I can't imagine seeing any more intervention than we've already had. There's a strong argument to say it's been a little bit too arduous. And part of the reason is because I think rental growth will decline. I think that will be used by probably the Labor Party or the Liberal Party, like at the back end of the year, if they're in power, to say, look, here is evidence of us being good economic managers. I don't think they'll be able to claim any credit for it, but they will, right? So, I don't actually anticipate anything else will happen because I think vacancy rates will tick up, and I think rental growth will continue to decline. I would love to see the 3% APRA buffer change. I think they will be a little bit worried about it being too stimulatory for property markets. So I don't think they will touch that as much as I would like that to happen. I think there will probably be a lot of murmurings about investors. If you look at as recent as yesterday in the Sydney Morning Herald, there was the stories about the tax gap between what investors should be paying and what the ATO is actually collecting. I think there'll be a lot of discussion and rhetoric around that, especially, as Cate says, in when we have first home buyers into focus. But I really just think it would be a bad idea to intervene any further, and I don't think the impetus to do so will be there in 2025. I hope I'm right for a lot of reasons.
Yeah. Look, I think if the coalition form government, one of the things they've spoken about for a little while, and I think they'll make as part of their policy platform, is to allow first home buyers to access their superannuation to get into their first home. And on the 3% buffer, there's been different like parliamentary inquiries or what have you, or where they've pushed for something like that happening for first home buyers only, to have their buffer reduced. And they make the case generally they're going to be younger, they're more likely their income's going to be growing over a longer period of time. So that, I think there's more a possibility for that with potentially first home buyers. I think with the federal and state governments are going to continue to look at ways to incentivise building new stock. I mean, the coalition, the Labor Party's got its, goal for building new houses. All the state governments, the federal government, are all in on trying to build more property. So I think they're going to keep trying to find ways to incentivise that, minimise the number of hoops that developers need to jump through. Maybe even, God forbid, reduce some taxes for developers. Find ways, as we've seen examples of this year, to skip local council approvals based on certain criteria. So I think that we'll continue to see some policy changes across different state and federal governments in that area. I think there's also the potential I guess also that also feeds into build to rent, which is a Labor sort of driven policy preference. So if they're in government, I think they'll look to keep pushing build to rent, whereas I don't think the coalition will so much. They prefer to support mums and dads being able to invest for themselves rather than large, mostly overseas corporations build developing the build to rents, and the coalition like to push for home ownership, notwithstanding that there's always a certain percentage of the population that are going to be renting. So I think they'll look at ways to increase returns for particularly the Labor government, but maybe both governments might also look at ways to increase returns in some way for those who purchase new properties. So a lot of that's really about supply for me.
Yeah.
All right. Number 7 which is sort of, I guess, interconnected with what I was talking about there a bit, but what do we see for developers and new builds in 2025?
I think building starts will increase nationally, but obviously due to state-based legislation, some states will do heavier lifting than others. I think Victoria is going to have some serious building in 2025. With the reduction in interest rates combined with civil infrastructure projects being finalised in many cities, we can expect more private builders doing bespoke work and more renovated houses being sold. So on the ground in my world, I look at what more builders in the workforce, more cost-effective builders in the workforce will do. And we've seen a lot of old stock sitting around that, when I say old houses that need lots of renovating, whether it's investors selling them off because they don't meet minimum standards, or whether it's builders and developers that were planning on land banking them and they've felt the pinch. We've seen a lot of stuff being fire sold, and not everyone has an appetite for it, and not everyone likes the feasibility that they're looking at when they're working out how to update this thing. So I think we'll see a lot more uptake for properties like that, and some really nicely finished properties coming onto the market.
Okay. And do you know, this is one we can probably have a number for. Now, we don't have here today how many new builds there were in 2024, but if you're going to pick a percentage across the country, you said there would be more new builds in 2025. Do you want to put a percentage number on that?
Yeah, I don't think double digits, so I'm going to go 5%, which is still a significant change.
It is.
In the face of what we've been experiencing. But I think some states will do the heavy lifting.
Yeah, okay. That's good. Thanks. Mike, what have you got for us?
I think we'll continue to underperform the 240,000 a month target. That's the 1.2 million homes, and that was to start 1 July 2024, so we're quite a way into it. I think the government really should help the construction sector, and I think if they do that, we're going to average 190,000 a month. If they don't, I'm pegging it at 170,000.
But there's all the numbers suggesting they're going to underperform Labor's target, which is what you're saying.
But on 2024, what sort of increase percentage-wise are you anticipating, Mike?
I would be kind of thinking at most a 5 or 10% natural increase, and maybe 10 to 20% if there's some government intervention.
Nationally?
Nationally.
Yeah. Okay, all right.
Sorry,
so
might need to
5 to 20%. Let's narrow that down. What's your 5% range?
Well, 5
because it's the prediction of what the government are going to do as well is inside of this.
Okay, well, I don't think the government will do anything in the first 6 months, so it's probably in the back end. So I'm sort of saying, look, I'll say maybe like a 7% increase.
Cool. Yeah. Look, I land pretty similarly. I think, and I think I talked about it last year and in our review of last year's predictions. I think this is sort of building momentum, and I think it's really going to play out 26, 27, 28. We'll see huge numbers of new builds built, but it's going to take 2 to 3 years of federal and state governments unwinding taxes, improving incentives, making it easier, making it easier to employ people to work on residential builds. And, we've seen the ALP come up with their, was it $10,000 if you hire apprentice, you get a $10,000 kickback or something like that. So, yeah, I think I would similar. I'd say 5 to 10%. Call it. I'll say 8%. Actually, no, I'll say 6%. But I think we're all probably around that 5 to 10% mark with increases. But I think we're really going to see that bear fruit more likely 26, 27, 28.
Yeah, I would agree.
I mean, we need more, right? We're all saying there will be more, but I think we can
what we
all
get
agree that
and what we need
enough.
and what we legislate, they're all very different things, aren't they?
Yeah. And when you live in such a bureaucratic society, these things take time to unwind or fix, don't they? All right. So prediction number 7, one of the biggies, interest rates.
I'm just wishing we're recording tomorrow because later today we get the inflation rates. And
so
that
it's
will
better
tell
we
us.
record today.
Yeah, it is. And you know what? I was very, very specific with this one because I was a little bit sitting on the fence last year and happy to put out a bold prediction. I think we'll have a rate cut in Feb and another one in July, followed by one more before the end of the year, and 75 to 100 basis points cut for 2025 in total is my prediction. So 225s and 150.
225s and 150.
225s and a 50.
And third one will be a 50.
I'm not sure what order it could be in. What I don't think is that we'll have 50 in Feb. I think it'll be 25 in Feb. So either July or something towards the end of the year. I'm really mindful that we don't typically see, and I know that they're meant to be completely independent, but we don't typically see an interest rate cut right before a federal election.
Generally, we don't. We did it. We did see one.
We did once, didn't we?
I think the last one just before.
Yes.
But it didn't have any impact. And, that's what we've just seen in the US. There was some rate falls and it didn't end up helping Biden because I think the damage in the voters' eyes is done with what's happened over the multiple years of being in power. And so I actually think a late rate reduction doesn't make, based on those anecdotal evidences of those two elections pretty recently, it hasn't actually helped the incumbent. So I think it's probably too little too late anyway, even if one does happen before the election.
Cate, you're saying 1% lower interest rates by the end of 2025?
3/4 to 1%, yeah.
Okay, yep.
And I think that'll have us at equilibrium.
Mike, what have you got?
I am going to say the first rate cut will actually be in May. I think there's a little bit more data they're going to wait on that's going to hold them back on the February. You can tell probably by the way that I'm speaking, I don't have a tremendous amount of confidence.
But why wouldn't they do in the March meeting? It's March 31st to April 1st. So why would we wait till May then? Or do you think there's still more data that's required to spill out between now and then?
I think there's a little bit to sort of see in terms of the Australian to US dollar comparison and how that kind of settles after we have a little bit of Trump, because he's come out swinging with a lot of mad stuff. Like you think of all the priorities that they have in that country. One of the first things they do is release the JFK file. And now we've got like a freeze on federal funding projects. I think that was mentioned this morning on the news. I think that's a bit of a volatile thing. So I'm thinking, look, I don't think February, but it could be like a March or a May. I'm predicting another one at the back end of the year. So 2 25 basis point cuts. And where you're sort of saying 75 to 100 basis points, I might say 50 to 75, but I think it will probably be 2 25 basis point cuts. I'd like it to be more personally, but I'm worried about the RBA's fear of sticky inflation.
Yeah.
Yeah. Okay. Look, so I had 2 to 4 rate reductions across the year, but obviously that's a little broader. You've both gone just within the range of 1. So if I'm going to go in the range of 1, I would err on the side of 3 to 4, because history tells us once a rate rise or fall occurs, others quickly follow historically. Yep. So that's why I think they wouldn't stop at 2 unless the first one was late in the year. I think the first one will be in the first half of the year. I think, look, the money markets tell us that they think it's around 70 odd percent.
It was 84 at yesterday.
84 yesterday. So
yeah, Rate Tracker has us at 84. We've been 84 since the 24th of Jan.
Yeah. Okay. So that's telling a story. So look, I think, did I just say this? But I think we'll certainly have one by May. But look, it could be fair, but could be the April meeting, or the end of March, start of April. I think they call it the April meeting. It wouldn't surprise me. Look, if it's 84 yesterday, then I think we'd have it by April, which then gives time for 2 to 3 more across the rest of the year. So I'll say 3 to 4. I'll just say they're all going to be 25 basis points. They might do, what is it, like 10 basis points to get us back to a round number again. So there might be like a 35 or something in there. So that would be my prediction.
Yeah.
So you guys are sort of the same, 75 to 100 basis points, whereas I'm more 50 to 75.
Yeah. And we're more probably earlier in the year, whereas did you say possibly the second half of the year?
Well, I think May. The first one, and then one in the back end. So just a little bit later. And that my lack of confidence comes in, like the consensus is really like we're going to have it now. I don't know.
That last year though, at the start of the year, there was a strong consensus that we'd see a rate cut, and we didn't. We didn't have rate cuts for, it's been over 15 months now. No movement.
Might see a little surprise in the data today. I don't know. I've just got a feeling in my waters.
Yeah. And look, she's proven to be pretty conservative with holding the line. So Sandra Bullock, but
not Sandra.
Not Sandra.
He loves Sandra Bullock.
Michelle.
If we could get Michelle to just say, "There's a bomb on the bus," I mean, that'll do it for me.
I was thinking about the one where she's the mum who raises the guy who ends up playing in the NFL.
The Blind Side.
Cool.
I haven't seen
Blind Side. Yeah,
great movie.
Okay, prediction number 8. We're down to the last few. What do we see happening with rents in terms of how much they'll increase as a percentage, and vacancy rates?
What did they end the year on in the December data, rental growth?
It was pretty anemic, as I think it was like 0.2% for the month, something like that.
Yeah, nationally. I'm wondering over the 12 months what that ended at.
The 12 months, it was about, it was just higher. Yeah, so it was in the 5s.
Yeah, just above capital growth.
Yeah.
All right. Cate?
Okay.
First.
All right. I think rents will remain positive in all capital cities. Vacancy rates will get closer to historical norms in all but Melbourne and Adelaide. I think our vacancy rates will be pretty tight in Melbourne and Adelaide, but everything else I think will start to relax back to historical norms.
Okay, good summation. Mike, what have you got?
I've got vacancy rates at the end of 2025 at 1.6% and 3% growth nationally. I'm just swinging for the fence, Dave.
That's good.
If I jag those, that'll be impressive, right?
Yeah. Well, I had rental growth 1 to 3%. So if I'm going to obviously take that midpoint, I'll have that at 2%. I think in terms of vacancy rates, I think, again, it will be a small uplift, but I don't think it'll be too much. I think it'll be no more than 0.5 basis points across the country. And therefore, I'd expect most capital cities to have a slight uptick in and around that range.
You want me to do a percentage, don't you?
I'm going
to say nationally will be between 3 and 4, I think, for rental growth, but I think Adelaide and Melbourne will be higher than 5.
Yeah, wow, okay. What about vacancy rate at the end of the year? I got 1.6, so a little bit of an uptick from where we are.
Yeah, I don't think it'll be dramatic, but I'll say 1.8.
Dave?
Well, 0.5, what did it finish at the end of this year? 1.3, was it?
I think, yeah.
So then I'd be about 1.8, 0.5 above whatever it finished at. Yeah. Okay, cool. Prediction number 9, sales volumes and listings. What do we expect?
I think we'll have a strong start to 2025 with higher listings than the 5-year national average, but I think we'll have declining volumes in the second half of the year, which will take us just below the 5-year historical average.
So overall, in terms of new listings across the year, are we going to see a bump?
I think listings are always very hard to determine because your listings and sales volumes aren't aligned when you've got irrational vendors that decide not to sell. I think vendors that are selling in 2025 will meet the market. So I think sales and listing volumes will be more aligned. We had a lot of vendors.
Be similar to 2024.
No, I think we'll have strong sales and listing volumes in the first half of the year, and in the second half of the year, I think listings will erode a little bit, and with that will come a reduction in sales volumes. But I think that's where we'll see value growth ticking up. I think we'll see a lot of vendors deciding to sit still. 2024 was a year of upheaval for a lot of capital cities and regions. And some vendors were desperate not to sell at a loss. And so we saw listings, but they didn't necessarily translate into sales. I think this year, we won't see lots of vendors trying to sell, especially if the market starts to move. People kind of sit on their hands and enjoy that value growth.
Mike, what are you thinking?
I think I agree with Cate that we're probably going to see listing and sales volumes a little bit tighter together, and I'm expecting a 10% increase. I think I don't expect there to be any markets that are punching above 15% in terms of capital cities, whereas we had sort of like 3 of them doing that. I think that removes a little bit of certainty for sellers who are looking for that next place to get on with, and with the market galloping along so much and being very tight in some of those locations, that's kind of forcing them to sit on their hands. I think we're also going to see a lot of people taking profits in 2025. Or anecdotally, I'm already hearing quite a lot of people in Perth selling out, especially if they bought in 21 to 23. They're taking their money because they sort of fear that there wouldn't be this level of growth forever. So I'm pegging it at a 10% increase, basically for both. This year.
Okay. Look, I'm similar vein. I bet I might think a little bit lower, like 5 to 7%.
I think overseas migration being too low for economic prosperity is something that we need to be mindful of as a nation. And I know this is not going to be a popular statement among all Australians, but we've enjoyed a lot of prosperity because we've had our population increasing. And as far as births are going, our birth rates are dropping in Australia. So we really are reliant, if we're looking to continue to grow our population, to have overseas migration. I think the obvious one is China and US trade sanctions and oil price hikes from the Middle East stimulating more inflationary pressures. I think APRA intervention with investor activity, if that was to happen, that will have an impact on our market. Not necessarily a horrendous one, but it will certainly change things up. A stock market hard correction. I'm not suggesting a crash, but a hard correction. We've had a very good run with the share market for a long time now.
And just with the China AI coming out, that Nvidia's stocks have fallen dramatically. So it just is a good reminder for everyone that one sort of shock can make a big change to stock markets.
Absolutely. The volatility is very different to the property market. And unemployment rising faster than we forecast, that will certainly throw a spanner in the works as well.
Yeah, there's some good meaty ones there, Cate. Agree with all those. Mike, what about you?
I had 5 things, some in common, and then I scribbled down APRA because I agree with that. Insurance, I think, is going to be in the news this year. I think there's a good chance we're going to see continuation of the veracity and frequency of natural disasters, and the insurance figures are quite shocking when you look at underinsurance, no insurance. I think we're going to hear a lot about that, and that could have an impact on the market. But I've got Trump, which is, it's just one word, but I mean to say what Cate said, essentially. It's about the US, China, sanctions, and just the volatile stuff that bloke can come out with. I think global conflict is another thing. We've still got the war in Ukraine into almost its third year, I believe. It seems like the ceasefire in Gaza and Israel Palestine is on tenterhooks at the moment. So that's something that we could see. I mean, let's not discount the fact that China could invade Taiwan. That's been hovering on the horizon for quite some time, and that would be a rather large international incident. I think resource prices, we are sort of at a high point in the cycle. I think there's an opportunity for any change there to really impact markets like Perth. A lot of people are looking to Darwin. That really all depends on, price of gas and things like that. Immigration, absolutely. I mean, we're in a per capita recession. We require immigration, and I think there's quite a lot of appetite for
a reduction.
Reason
we're not in an actual recession.
Yeah, exactly. I think there's a lot of appetite to continue to curb that, but we actually do kind of need that as an economy. So I don't really know how that will play out politically, but either way it goes, it's likely to have an impact on the market. And I think construction as well. I think we're going to continue to see a lack of supply coming on, and that's going to help to keep a little bit of a simmering flame under the backside of property prices.
Great list, Mike, as well. Do you know, it's
Big
funny,
tickets.
things are reversed. Like, Pete used to be really conservative with what the risks, and Cate wouldn't provide too many. Then I'd have the long list and say some of those things that you've said there,
but
Mike.
You took us to war every time. I was like, oh my God.
Well, yeah, I mean, it's probably the biggest risk. That's the reality. So you're negligent not to say it. But Mike's done it for me this year, so that's great. I'll just share a few more. So I think our waning productivity in Australia is a huge risk, and that it's sort of flatlined for about 4 years or so, I think now 5 years. I think there's potentially being such a lockdown country during COVID, and then the work from home phenomenon, might have reduced our productivity levels. And we know productivity really is the core driver of increased standard of living over time. So, we need to keep increasing our productivity if we want property prices to keep going up and our standard of living to keep increasing. I think, another significant drag is where we're getting to with our democracy and our willingness to take on debt in government and not make tough calls in policy to improve productivity, but instead throw money at different parts of the community to try and win votes. And that's becoming a habit across state and federal politics, which means we're getting more indebted. And, I saw some article on the weekend where, Brisbane could build 11 new hospitals with just their interest bill, let alone paying off their entire debt. So, we're wasting a lot of our money because of the levels of debt we have and a lot of our opportunity. And I think that's a real risk. Then the third one, I think, the biggest risk, I've just said that the breakdown in the relationship with China, whatever may cause that. So, Mike's stated some of the risks which I've said in the past on that front. So, this would significantly change our standard of living in our country because of the volume of our wealth that is created by China buying our exported goods. It's massive. So if for some reason we couldn't export our goods to China, things would change dramatically in Australia overnight. So I've also got just more taxes on investors becoming the norm for state governments, so they can put a handbrake on property values. And I think, following the Victorian Labor government model, which we believe has had some impact on Victoria, and there is an incentive here as Victoria's potentially shown a way to suppress values, which, the West Australian, Queensland and South Australian governments might look to following their runaway markets. So, I think there are a number of the risks that I can see out there. There's always risks. Thankfully, there's always more opportunities.
That's a lovely way to finish.
All right. Lucky number 11, our final prediction for the day, inflation. What will we see for 2025?
I think last time we got in trouble about trimmed mean or headline.
Hey, well, December's still to come out. I might fall within the 3%.
You might. Look, right. I think we'll reach our target band in Feb, as in today's number will be pleasing, and inflation will stay within the band, in my view, unless any of these risks above stimulate things again.
So you're saying my 2024 prediction is about to come true?
Yeah, possibly.
Because this is last year's numbers coming out.
Yeah, true. Yes.
Okay. Yeah. Cool. So do you want to put a range percentage on that for 2025? How tight do we want to get on this number, guys?
Well, I think if today's figure trimmed is under 3%, it's going to be a high twos. I don't think we're going to get this surprise result. Here you go, it's 2.4. I don't think that will happen. So it will be a decision for the RBA to make. Do we cut rates in Feb based on this piece of data coming in that's just within the threshold? I think it will be just within, and I think they will cut it. So that's my prediction.
Okay, but then, sorry, your average for 2025?
I don't think we'll increase. Right. I think we'll land closer to the middle, but not necessarily on it. So I'm going to say we'll finalise the year on sitting within 2.5 to 2.8.
Yeah,
exactly what I have written down.
Okay, so Mike, you're 2.5 to 2.8 for this year. So
I think it would be lovely for Cate and I to share that one and get it right, and clink some champagne at the end of the year and toast to our own genius / luck.
I agree.
Look, I didn't have a 0.3% range, but I think very similarly. I think, it's going to continue to slow down, but I don't think by much more inflation. So I think, I'd be very happy with that range of 2.5 to 2.8.
Well, the RBA would too.
Yeah, exactly. We all would,
yes,
I suppose. So look, I'll say 2. I'm just to be different. But not by much. I'd just be like 2.4 to 2.7, to be honest. Like I can't see it getting much below, a 2.4 across a whole year, particularly when it's only just coming in at 3%, 2.9, 3.1. So
there's scope for us all to be right there, isn't there?
There is.
We've got enough overlap.
Yeah. Well, that wraps us up for our 11 predictions for 2025. I don't know about you guys, but I feel like we've all done really well, and they're mostly going to be very accurate.
I think we've all done really well in terms of diversifying and being specific, and we could get a real caning, and that's part of the fun, isn't it?
If it's looking bad in October, I think I'll just quit.
We'll just change it up. We're not doing predictions anymore.
Yeah, just pull the app.
The predictions feel good when you make them, not so much when the results
when
come
you reconcile
out. It. All right, cool. Well, look forward to seeing how 2025 plays out, and seeing everybody and seeing you guys again next week.
Yeah, and let us know. Jump on the Facebook page and let us know your thoughts. We've got a Property Trio Facebook page. We'd be keen to hear on those 11 points where you're thinking as well. And if you nail it, we'll give you a shout out at the end of the year.
Yeah, 100%. And don't forget to subscribe and follow us on whichever platform you're on. we put a lot of effort into each of these episodes. So we'd really love you to do that.
Nicely done. Well, I'll be texting you guys later when the inflation data comes out.
See you guys.
See you later.